Hi everyone, welcome to A View from the Floor here at the New York Stock Exchange. I am joined by a very special guest here. We have the Chief Business and Client Officer for Fundamental Equities from Goldman Sachs, Luke Bars. Thank you so much for being here. And let's start with forecasting the equity markets for 2026. What are you seeing?
Thank you for having me, Michelle. So first and foremost, we are constructive on equities for next year. We've seen a good, strong rally in equity markets. That means multiples are a little bit elevated, but actually the underlying fundamentals, earnings growth specifically, and how we're seeing client capital be directed still into public equities gives us a positive backdrop. Now, I do think we need to take one step back. We need to recognize that multiples, especially in that US large cap space, are elevated. History would tell us that from that level, a pullback of 10+% is not unreasonable to expect. But as long as the fundamentals stay true and we continue to see that progression in earnings, we still think it's a great place to be invested.
A lot of talk in 2025, AI driving a lot of equity return. Is it a sustainable trend?
Well, I think first and foremost, we see the AI trade as transformational. In other words, the technology is going to change the way we operate, and it's going to have material impact on both top and bottom line for companies cross-sector. What we've seen thus far is significant capital investment in building of our LLM models. So building out the infrastructure and the framework for how AI is going to be applied holistically. We do see that continuing. This year, we've seen roughly a 50% increase in capital investment. That's up to $360 billion for 2025. We think that could go another 20 or 30% through next year because the big hyperscaler businesses need to continue to invest to stay up with everyone else. What we do think will happen, however, is that we'll see an evolution of that trade. We'll see more differentiation in outcome. So who are the winners and losers in that? And also, as we think about going from the hardware trade into the application of AI, who are the winners and losers in software? I would say our headline is the big still get bigger. The dominant players in terms of market share are still going to be the ones that have the right technology, the right data to win that game. But we have to be very thoughtful around the next iteration of that, where it is going to be far more separated than we've seen in the last, let's say, 24 or 36 months.
So other than AI, what other sectors or themes do you see looking to the year ahead?
I would say one of the areas we've become increasingly bullish on in the last couple of quarters is healthcare. We have seen innovation in the healthcare sector in a very substantial fashion over the last couple of years, but you haven't necessarily seen the multiple re-rate or the recognition of that innovation in the same way you might have seen in core technology. So first and foremost, what you have seen is large pharmaceutical businesses have reinvested in R&D. There had been a trend maybe 10 years ago for that R&D to come down as we started to see them outsource that to some of your smaller biotech startup businesses. That's changing. And so that increased R&D spend is resulting in new, innovative, transformational technologies, both that have health impact, but also have economic impact, both on the companies and holistically across the economy. And so that's an area where, right now, the entry point from a multiple perspective is much more reasonable, and the innovation is as transformational in certain pockets as we see in other areas. So that's, for us, somewhere that, especially as you go down into the biotech, the smaller cap growth part of that ecosystem, people aren't necessarily recognizing the same fashion right now.
Earlier, you mentioned large caps. Let's talk about small caps. They have been going strong the second half of 2025. Where do you see this going? Are there any new catalysts? Are there any risks?
So we are increasingly optimistic around what's happening in the small cap space. That doesn't mean we're bearish on the large cap space as we talked about. We just think there's going to be a broadening trend. And I think the catalysts there are first and foremost a broadening of the earnings profile across the US space. We've seen that very dominated by, as we talked about, the AI large cap part of the ecosystem, but small caps are starting to take their fair share. And I think also as Fed policy normalizes, and that doesn't mean we see a radically dovish policy stance, but just the normalization of policy rates is very beneficial for your small cap cohort of stocks because they are on floating rate debt, they are short maturity debt, and so that hits their bottom line and that hits their margin quite positively, and so you're starting to see that turnaround. What I would say, and I think this is important as we think about how to allocate to that space, is whilst you've seen a very positive backdrop for small caps in the last couple of quarters, it's been isolated to arguably the lower quality, more volatile, most shorted parts of the ecosystem, and actually we think that's going to evolve through to 2026, and we need to be investing in the higher quality parts of that ecosystem where actually the active exposure you can take by differentiating from a generic beta exposure in small cap is what's going to reward you most healthily.
And finally, what is attractive to you in terms of opportunities outside of the US?
So as we think about the broadening of that equity trend, we do see opportunity in Europe. That has been a decent backdrop this year as people thought through the reform of EU and some of the competitiveness stance that was coming out, but also just the change in fiscal sustainability rules. And so what you've seen in terms of investment in areas like military and defense, and just broadly the improvement in economic growth and inflation backdrop. We think that will continue to come through, and we think the earnings story for European companies will continue to accelerate. I would say last one and a little bit more esoteric, but what we see in India from a long-term perspective and the growth opportunity that we have in that marketplace, given the underperformance this year, and what we see as very attractive long-term growth at a very reasonable multiple is also something we think investors should increasingly look at.
And he is Luke Bars with some fantastic insight. Thank you so much for joining us.
Thank you so much for having me.
And that'll do it for us here on Asset TV on the floor at the New York Stock Exchange. I'm Michelle Yu. We'll see you next time.